Hello ICT traders, welcome back to the channel. If you are new to the channel, you're welcome, and if you are a returning viewer, you're welcome back. So those of you who are new here, let me tell you something very briefly about this YouTube channel. This channel is specifically dedicated to those of you who are starting out with the ICT concept, and so I've been able to make videos in such a way that you all need to just come to the playlist. There is the core basics, and there is the intermediate, and there is the advanced. Now this is the core basics, intermediate, and advanced ICT concept is going to be shared with you, so make sure you watch everything accordingly. So in today's video, I'll be showing you another type of entry which is a bit different, so we're taking it gradually. So I'll be showing you how to use a breaker block for entry. Now, I know some of you know what exactly is a breaker block, and some of you don't know what a breaker block is, but let me just briefly sketch it out for you right here so that you will see what exactly is a breaker block. So a breaker block is simply this type of pattern movement. If you see price action like this, all right, boom, and price decided to fall down to that area, and it creates this exact pattern. I can only show you by drawing the pattern, or if you have something like this, boom. Now, just like an order block, a breaker block has a bullish breaker block and a bearish breaker block, and the name is actually derived from the kind of price action that follows the pattern. All right, so if price comes back and hit this area before falling down, we have a bearish breaker block, and this is the opposite of a bearish breaker block. Price goes bullish. All right, for you to understand breaker block, you have to go to the beginners core basics, because everything has been covered in that particular playlist, so make sure you go there. So this is an example of a breaker block, and I want to show you how to use it for an entry. So a breaker block, boom, we have a shift in market structure here. See price coming up to this area, retracing to create this low, and boom, sweeping liquidity above. All you need was price to come back and hit this area before pushing up, but then price went crashing down into this area. That is a breaker block formation. Now, this is the reason why I choose this particular breaker block, so I can explain this to you. Look at what has happened here. The body of the candle did not close above here. It is only the wick that swept liquidity, and we still consider it as a breaker block. And that is exactly what I wanted to show you. In a breaker block formation, you don't necessarily need the body to close above here. Even if the candle sweeps liquidity, you can consider that as a breaker block. The difference between a breaker block and a mitigation block is also there on the YouTube channel. So if you watch it, you'll be able to identify it and you will know the difference. So this is a breaker block, and then what you do is that the last sell candle that created this low becomes your bearish breaker. So that will be the point of interest. As price comes back to that level, that is your point for entry. So this is the simple model you can use for trading the breaker block, and you target the recent area for your profit. And that is how this strategy works. And sometimes if you're starting to trade with this concept, you can start with, even if it is 1:1 risk to reward ratio, you don't have problem. All you need is to learn it consistently and have accuracy. So as soon as price comes back here, you will see it, touch it, and start going the opposite direction. I just finished showing you an example of a bearish breaker block, and then here is a bullish breaker block. Look at this price action. Price came, retraced, clearing liquidity below here. You know, this is it. You see a breaker block because that was liquidity area, and a shift in market structure right here. All right, that is exactly how a breaker block formation is. And which one is your breaker block now? This last bullish candle that price actually printed, that becomes your bullish breaker. So what you need to do in this case is to wait for price to come and touch it, and boom, you can see price went up high to that area, creating another bearish breaker. But this time around, price never came to that area. So if you can use this concept, sometimes price will come, sometimes price will not come, but then All in all, you have a very powerful setup. If you can use this concept for trade entry, you will have a lot of good trades to use as a beginner in the ICT concept. I know some of you have gotten value in this simple video I've shared with you. If you have gotten value, make sure you tap the like button and also share this video. Another example of a bearish breaker, look at this. Boom, boom, boom. And then shifting structure, sweeping liquidity. Look at this. Sweeping liquidity and then shifting structure. Right here. Price coming back to this area. Boom, the sell happened. So breaker block is so easy to identify. That is as easy as anything. I'm starting out with these things because I know these are small type of entry models that you can use to make money in the market. Another bearish breaker, you see, sweeping liquidity above here, shifting structure, coming to touch this last sell candle, and boom, price went downward. So these are all the examples you can see, and you will know that this concept works every time you want to take trade. All right, guys, I believe you've learned something. Make sure you help me subscribe and turn the bell notification. See you in another video.